What is going on, everyone, and welcome back to Explain the Charts. Today, on November 24th, 2025, we are doing a deep dive into one of the market's most talked about stocks, Tesla, symbol Tesla. There is a tremendous amount of news to cover, with conflicting narratives around AI, Robotaxi, and analyst ratings, creating a very interesting setup on the charts. First, we'll break down the latest headlines, and then we'll jump into the technicals to see what the price action is telling us. The current sentiment around Tesla is a true battleground between bulls and bears. On one hand, there is significant optimism surrounding Tesla's pivot into an AI and robotics company. Elon Musk is pushing hard on the development of their in-house AI chips, like the upcoming AI-5 and AI-6, vowing yearly breakthroughs to compete with giants like NVIDIA. We've also seen major progress on the Robotaxi front, with Tesla completing self-certification in Nevada and advancing its service in Arizona. This has led to a flurry of positive analyst ratings, with firms like Stifel and Wedbush raising price targets as high as $508 and $600, citing the long-term potential of full self-driving. However, this optimism is being challenged by serious headwinds. Broader market fears of an AI bubble are causing investors to reassess valuations, which has hit high flyers like Tesla and NVIDIA hard recently. Furthermore, reports of Robotaxi crashes and data suggesting a higher crash rate than competitors like Waymo are weighing on sentiment. We've also seen insiders like Peter Thiel's fund significantly reduce their stake, and retail sentiment on platforms like StockTwits has reportedly turned bearish. Adding to the uncertainty are concerns over slowing sales in China and a recent pullback following a stock pop from President Trump's EV interest deduction announcement. So we have a classic scenario of a potentially revolutionary future clashing with present-day risks and valuation concerns. Now, let's see how this news is reflected on the daily chart. Looking at the bigger picture, we can see Tesla has been on a wild ride this past year. After bottoming out near $182 back in August 2024, it went on a massive tear, peaking near $488 in mid-December. This was followed by a significant correction that found a bottom around the $220 level in March of this year. The stock then chopped around before experiencing an absolutely explosive move higher in early November. You can see this massive price gap right here, where the stock jumped from a close around $251 to open near $285 the next day, a move largely fueled by that renewed AI and Robotaxi optimism. That rally continued, almost parabolically, all the way up to a recent high of about $428 just last week. However, as we zoom in on the most recent price action, the story changes. From that $428 high on November 20th, we've seen a very sharp rejection. The stock fell aggressively for 2 consecutive days, slicing right through the psychological $400 level. This sharp decline correlates directly with those growing fears of an AI bubble and likely some major profit-taking after such a vertical run. The high of that move, around $428, now stands as formidable short-term resistance. The price is currently trading around $391, trying to find its footing after that steep drop. The immediate support level to watch is the low from last week, right around the $383 to $384 area. This level has been tested before in late January and early February, making it a critical line in the sand for the bulls. If that support fails, the next logical area of interest would be the consolidation zone between $350 and $360. Let's switch over to the 1-hour chart to get a closer look at this recent breakdown. Here we can see the structure of the sell-off more clearly. Notice the high volume on these red candles as the price broke below $410 and then $400, indicating conviction from the sellers. The price has been attempting to stabilize, but so far, any bounce has been weak. The $400 level, which was support, has now likely flipped to become short-term resistance. Bulls will need to see the price reclaim this level with significant volume to suggest the downtrend is reversing. Until then, bears remain in control in the short term, eyeing a retest of those $383 lows. Now, drilling down to the 15-minute chart, we can analyze the intraday action from the end of last week that led to this point. Here on the 20th, you can see the initial topping action followed by the aggressive sell-off that began late in the day. Then, on the 21st, the selling pressure continued right from the open. The price cascaded lower, breaking through multiple potential support levels with very little fight from the buyers. This kind of price action shows us that momentum has clearly shifted to the downside on the shorter time frames. Traders will be watching for signs of a base forming or a clear reversal pattern before considering long positions. So, let's go back to the daily chart and recap what we're looking at going forward. This is a very complex but fascinating situation for Tesla. Let's summarize the key price levels to watch. Immediate resistance is now at the $400 psychological level, followed by the zone around $410, and then the recent high at $428. Major overhead resistance remains the prior peak near $488. On the downside, critical support sits at the $380 to $384 range. A break below that could open the door to a move towards $350, and in a more severe correction, a test of the huge gap left in early November, which starts around $285. For a bullish scenario to play out, which I'd give a 50% probability, we need to see the $380 support hold firm, followed by a strong reclaim of the $400 to $410 area. This would be reinforced by positive catalysts, like a major Robotaxi partnership or a blowout AI chip demonstration. Conversely, the bearish scenario, also with a 50% probability given the sharp reversal, involves a failure to hold $380. This would be reinforced by continued weakness in AI-related stocks, negative company-specific news, or a broader market downturn. The main thing to watch is the battle around this $380 support level. How the price reacts there will likely dictate the next major move for Tesla. Keep an eye on volume, as a high-volume bounce or breakdown will add conviction to the direction. And that wraps up our analysis of Tesla for today. Remember, this is not financial advice. The markets are extremely volatile, and you should always do your own research and risk management before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you next time.